This is the MTPredictor weekly update for January 30th. We've got a lot of charts to cover tonight, and so we'll get right to it. We got the Fed meeting out of the way. We're in the heart of earnings season, and so we've gotten a little more pickup in the volatility. This happens to be the S&P 500, the E-mini contract. This was from our trading room on Friday. Just going to kind of go through our process, but this is the 15-minute chart. And this is actually Thursday's action. And what we'll do is, before we set up for our next trading day, we're going to take a decision point off this swing high here. And that's our major, if we're trading intraday, our major resistance to the upside. And then we're going to take a decision point support off of this swing low here. Okay, this gives us a couple of areas, again, of support and resistance. If the market gaps up into this area, we may look at setting up a trade in that area in one of the smaller time frames, or if we get a gap down in this area, this may hold support. And if we get especially if in conjunction with some type of wave pattern down or up, and we'll be looking at those areas when the market opens. So on Thursday, this is basically what was set up. And just going to move this forward here. So we opened Friday here on the 15-minute chart. That was our open. And then the market gapped right up into our decision point sell area. So let's take a look on the 3-minute chart how we would have, or how we did play this in the trading room. So here is our 3-minute chart of the S&P. And this was Thursday's close. Here was our 15-minute decision point resistance. And as we skip this forward, okay, we had our first move up into our decision point. Now we have to wait for what we call our red sellers bar that the software produces for us, and there it is. Okay, and then we need an initial target. So in order to get our target, okay, we go back to our 15-minute chart here, and this will be our target, but on the 3-minute chart. So let's translate this over to our 3-minute chart here. Okay, so here is our 15-minute support, decision point support. This will be our target, and this is translated onto our 3-minute ES chart. Again, here's our red sellers bar. We can set up our trade now. I'm going to select our entry, stop, and target and see what our risk reward looks like. I'm going to click on this once for our entry, a tick below the low of the red sellers bar. I'll click again on it to let software know to put my stop a tick above the high of that red sellers bar, and then down here is my target. And it tells me I've got about a 4-to-1 risk reward, so that's plenty. And we actually set this trade up in the trading room on Friday. And the next thing we're going to look for as the market comes down, how do we know whether we should just take this target or if we should hold for more potential downside? Well, this is where our strong trend filter comes in here. You see we have a gray bar below this oscillator, and we've got a gray bar above. When the oscillator comes down and gets into our gray band at the bottom, it's telling us there may be more downside ahead. We may want to hold part or all of our position past the target and start managing with our little red ATR trailing stop. So we haven't quite gotten to that point yet. Now we see the strong trend filter has clearly come in to our gray band here, and so at this point we can start trailing with our ATR trailing stop and managing the trade this way. So we'll go ahead and pass on the target here. We'll pass on this. We've got some strength to our trend to the downside, is what our strong trend filter is telling us, and now we're managing it with our trailing stop. And it was good to hear some in the room that caught this trade right from the get-go in the morning, and did see the strength band into the gray band here to the downside, and we're trailing with that trailing stop. So at this point we got another leg down. You can see we're still trailing with our trailing stop here. We've gone well beyond our initial 4-to-1 risk reward target. And let me make this a little bigger. And so at this point, in here we'd be finally be stopped out, and I can redo the risk reward on the trade so we can see what that would look like. So you can see it was just about a 10-to-1 risk reward that it ended up being on a sell of 4 contracts. Again, we were risking 400. In this case, we were able to take out about $4,000 before expenses. So an excellent trade there on the S&P, and showing you the rationale behind the setup and how we use our 15-minute support and resistance using our decision points, and then translate that onto the 3-minute chart where we're actually going to trade off of, and setting up the trade, making sure the risk reward was good, and then having a plan whether or not we should go ahead and take the target or pass and trail with the ATR trailing stop. So excellent trade for those S&P traders on Friday. All right, so let's take a look then at the daily charts now. Just kind of see a little bigger picture where we are. This is our daily Dow. I'm sorry, this is the weekly Dow chart. And if I put our analysis on, as you've been following along in the weekly video, we've had this 5-wave pattern up. We finally did come into our typical wave 5 resistance. We hit Dow 12,000, and this is the area we've been looking for weeks that we felt the market would get to. That was a big target up there, and it coincided with our typical wave 5 up. And once we got into our typical wave 5 up, it's when the market began to sell off. Obviously, there's other events going on in the world, in Egypt and so forth, that are affecting markets here, markets around the world. So, but it's amazing how it all coincides with the market being up into this typical wave 5, Dow 12,000. Market finds some excuse to sell off in there, which is what we expected. So we'll see where this, if we get an ABC type correction in here. The weekly support, if you use a decision point off this wave 4 swing, would be back down to this 10,800 area. Again, this is a big weekly time frame. A lot of points in between here and there. So we'll see what we get. And then taking a peek at gold and silver, I'm sorry, gold and oil. That gold trade, we had that TS1 sell signal, and it happened to be off a significant high. This was an all-time high in gold back here. And then we got an ABC correction with a lower high here, where we got the TS1 sell signal. And I know some of you were then thinking, this may be like Holy Grail type trade and looking for the wave 3 target down. And, good for you. The thing that put a little wrench in it was the long signal here, the TS4. And like I was saying in the room, it was hard to ignore the TS4 to the long side with the bigger trend, because the signals in gold have just been phenomenal and spot on. And anytime we've gotten a signal, very few of these signals have failed. This originally was a 4-to-1, but if you did play for the wave 3 down, you basically hit that on Friday and into our decision point support area. So it's no surprise that the market got a nice hard bounce on Friday, also coinciding again with the unrest in Egypt and some other things going on. But then oil, we had our decision point. We had a wave 5 up at this DP here in oil. Again, if I put the analysis on, there's our 5 waves up into just about into that typical wave 5, and we had a sell-off there in oil. We hit the target, a little better than almost 4-to-1 target there, and then once it hit the target, we got a hard bounce in oil as well. So we'll continue to kind of monitor these and see if gold continues to rally with what's going on. And now that the Dow has hit that 12,000 mark, we get some more selling heading into Monday, into the rest of the week. Gotten the Fed meeting out of the way, so the market's a little more freedom to now that that Fed meeting is out of the way, to get some movement and see if the volatility in the ranges pick up. We've had some real small constricted ranges up until Friday in the Dow and S&P, so those have opened up a bit, and we'll see if that continues into this week. All right, hope that helps, and we'll do it all again next week.